So let me know whenever I can begin. I think it's good time to start.
Sandeep, give us 1-2 minutes more. Let
Okay.
other members start.
Perfect. Okay.
Okay, now webinar is also live on YouTube. So I think we can start. CA Rishabh, please start.
Okay. Good afternoon, everyone. I welcome you all on today's webinar on ITR U and return filing in case of sale of equity, mutual fund, futures and option, organized by Jalandhar branch of NIRC of ICI. Today we have our guest speaker CA Sandeep Kumar with us. Now I welcome our Jalandhar branch chairman CA Shashi Bhushan to start the session and introduce our guest speaker CA Sandeep Kumar. Thank you.
Thank you, CA Rishabh Agarwal. Good afternoon, everyone. I welcome all of you on today's webinar on ITR. After organizing very useful seminars, now our team has started webinar so that we can have knowledge sharing on regular basis on virtual mode also. And also we can have sufficient CP program so that members' CPR's requirement is fulfilled. So today's hot topic is ITR U. Members are facing issues in these, and as well as normal ITR filings are going on. So we requested CA Sandeep Kumar ji to share his knowledge on this topic. And we are happy that in these busy days, he has done great efforts to prepare and discuss the topic with us. We are thankful to him for accepting our request. Regarding his introduction, CA Sandeep Kumar is a chartered accountant, company secretary, and he has also done graduation and PGDBA. He was qualified as chartered accountant in May 2015. So he has 7 years experience. His key domains are audit, accounting, taxation related services, and he is basically belong from Gurgaon. CA Sandeep Kumar is currently engaging in accounting, compliance, and audit services to mid-sized clients in corporate and social sector. He is experienced in startup, in incubations, business modeling, and consulting. He has worked prior in corporate finance role at an IT company based out of Hyderabad and also worked for Big Four in audit services. He is education enthusiast. He is providing coaching and mentorship to CA students and CAs. He has conducted many programs. So we are honored that CA Sandeep Kumar, a young speaker, is with us to guide us on today's topic. So I, on the behalf of all the branch members, I request CA Sandeep Kumar ji to kindly start the session.
Thank you so much for this wonderful introduction. Thanks, Ashish, and thank you, Rishabh. So without wasting any time, I will share my screen. I hope my screen is visible to all. So in today's session, we will mostly cover the ITR filing issues with respect to, which the traders or investors, those people who are investing in share market, they are facing. So there is a lot of confusion or, lack of clarity in some of the areas. My focus will be to cover most of the things in a practical manner. So even though I have slides prepared, like 28 slides, but I will not spend that much time on slides. And I will, so just to let you know, I will be showing you the entire calculation, how the Zerodha reports look like, how different things will be calculated. Sometimes it's very confusing, just by understanding through slides. So we will have all those resources here. So please stay tuned till the end, and let's begin with the session. So I will first start with a brief about the ITR filing on traders and investors. Let me start it in an interesting way. First of all, we have seen that ITR 3 with respect to share market transactions, it's huge now. Every other person is kind of trading in FNOs. Of course, they are, most of them in my clientele, they are incurring losses. But yeah, thanks to such movies and thanks to the kind of scenarios we have overall in the economy, there is a huge surge in the ITR 3 filings for share market transactions. Of course, it gives us a lot of opportunities as well from professional standpoint. Today, the common questions which we will be discussing are, so turnover from share market activities. This is very hot topic. Again, a lot of segregations are there, a lot of calculations are there. We will see in the live report how exactly we calculate the turnovers, because a lot of different brokers, they have kind of different structure, and there are so many brokers. Everyone will follow a different reporting format, and sometimes not everything will be given by the broker. So the client will ask us, sir, you please calculate the turnover, and you see how whatever whatsoever you want to do, please do that. I can provide you whatever information I get from my broker. So a lot of responsibility come on us to check and see if the turnover is calculated correctly or not. Now again, some important pointers with respect to STT, securities transaction tax, why it is important to note when the person who is investing is a trader or investor. So we will discuss a bit on this part. Then we will see delivery based trading, shall it be considered as PGBP or capital gains? What does the law says? There are certain not very clarifications available as of now, but yeah, whatever resources we have, whatever guidelines we have available, we will see if the PGBP, if the delivery based trading will be covered under PGBP or under capital gains. So those areas we will touch upon. Advanced tax liabilities, again, it's very important for us to see how the advanced tax will be calculated in case of such transactions. 44 AD, can we go about it, can we not go about it, and what is the best way to file such returns? We will see that, and a little bit about what will be the turnover aspects and all. So let me just start with the turnover calculations. First of all, we know why we should calculate turnover. So the reason why turnover is required is we need to assess if the tax audit will be applicable or not. Okay. So in order to assess that, we need to see how much is the turnover. So the limit should be 10 crore rupees, because most of these transactions are through the online way. So if it is online, then the maximum, everything is transparent through banking channel. So it should be 10 crores. Now let's see one by one how exactly we check turnover in case of intraday, in case of options and equity, in case of futures, and then short-term and long-term capital gains. So I hope because this is a group of professionals, we know that we will not be touching upon the basics part, but yes, overall, wherever it is critical, wherever a lot of confusion is there, we will of course spend more time on that. Initially, I prepared this slide deck with the help of some snips, but right now I can show you the exact report. Okay. So first important component, whenever a share market trader or an investor comes to us, he will give us the report. He will deal in these 4 type of areas. First one is intraday transactions. Second one is options in equity, currencies, commodities. With options, there comes futures as well. So futures in equity, currency and commodities. Then there is short-term and long-term capital gains. Okay, so these will be the broader heads under which he will be transacting in the share market. Let's first talk about intraday. So whenever we have intraday, let me come to my screen. Give me a second. Okay, hide. Okay. Hide. Right. Okay, so the kind of report, most of we have seen that this is the kind of report which your client will provide you. It starts with this. I have inserted few more tabs to do the calculations and all. We will discuss that. So first of all, I'll give you the overview of the report. This is the first tab. It says trade-wise exit. Okay, this will have list of all the trades which you have entered. As of now, let's not look into it. We will not bother much about this, because this is a consolidated report. We have reports segregated each sector wise. So first report, let's ignore as of now. I will just mark it red. I will move on to the next one. Equity. Now this section will talk about all those purchase and sale transaction of shares or mutual funds wherein it is delivery based. It means the person, he transacted today, and he will sell it maybe after 10 days, 15 days, or maybe in a short run, maybe 6 months, 7 months or so. And of course, he can sell it after 1 year, 2 year also. That will be long term. So this particular equity sector will talk about delivery based transaction. Okay. The report will look like this, wherein it will speak us about the turnovers. It will speak about the realized profits, the turnover, and what all are the different charges. The same thing will be given below as well. Now, first section in this will be intraday. Intraday, of course, the person purchases and squares off it on the same day. He purchases some shares for high, and by the end of the day he squares it off. This is a purely speculative transaction. In case of a purely speculative transaction, let's see what is the formula to calculate the turnover. Absolute sum of profit and loss per share. Okay, so we see that these are the buy numbers, these are the sell numbers, these are the realized profit and loss. Okay, this realized profit and loss will have a negative and a positive value. Let's put a formula over here, absolute ABS, and take all the absolute values over here. When I do that, meeting control, when I do that, I get to this number, which is 3,39,690. This is my turnover. Why this turnover is required? Because if it exceeds 10 crores, tax audit will be applicable, and accordingly different procedures needs to be done. Now, the same turnover I see here as well, 3,39,000. Intraday, pretty simple, absolute value of the realized profit and loss. Next, we will talk about, so I'll go step by step. Next, we will talk about options. Options is a little complicated, but very simple to calculate in Excel. Let's understand how exactly we calculate turnover in case of options. So we need to we will have a report like this. Let me come to the report. FNO section will give me futures and options. The first one here will be options. Okay. Now there will be a buy value, there will be a sell value, and then there is a realized profit. Little tricky part, please pay attention. The way we need to calculate turnover is, first of all, take the absolute value of your profit and loss. Okay. When I say absolute value, this is your realized profit. This is minus 1580. Take it as 1580 only. That's it then. So it will be an absolute value for all these numbers plus we need to take the sell value. Whatever is the sell value, that should be added to the absolute value, and that is how we will get turnover. Okay. So this is my sell value. This is my absolute value. Let me calculate turnover. Plus sell value Okay. So this will be my turnover in this case, right? Okay. Now let's move on. Now again, this is a turnover, 30 lakhs. This will be considered only for the purpose of checking if the tax audit will be applicable or not otherwise. Now let's move on to the third one, futures. Again, futures is also fairly simple. Turnover is the absolute value of profit and loss. It's just like intraday. Right now, this person is not dealing in futures, so I have taken a snip from some other client, wherein quantity, buy, sell, realized profits, and then the absolute value. So just an absolute formula on this particular column, and we will get the absolute values. I will pause here for a moment in case any of you have any questions, or let me know if I'm going too slow, too fast, so that I can accordingly modify my pitch.
Hey, so would like to know the logic behind adding the turnover in options. Like we have taken the absolute P&L plus the sale value. So what is the logic behind adding the sale value in our calculating annual turnover?
Right. So that is how the guidelines are given to calculate the turnover. So basically we do take the absolute values plus this will be the premium which we will be receiving. Okay. So, that is how the guideline says. It is not very clear as to why we are taking this much extensive number of, amount of turnover, but this is how it has been given. Plus this turnover we will be calculating or looking at it only for the purpose of checking if it crosses my 10 crores or not. Otherwise, I will not be using this number a lot.
Okay. Thank you.
Yeah. Okay. So moving on, we spoke about futures. Okay, we spoke about futures. Till now we are clear. Now we have one more transaction, capital gains. Again, let me come to the report. Let me hide this part. Okay, after intraday, I have my short-term trades, and then I have my long-term trades. So this person is not dealing in long-term, only short-term. The turnover here will be the sale value. Now it makes a lot of logic to us. The sale value is turnover. We are happy. This is my turnover, only the sale value, no absolute nothing. Okay. The sale value will be called as the turnover. Now the question arises, why in the case of a capital gain, we would like to see turnover? Not making sense, right? But sometimes what happens is, see, it again depends upon the nature of transaction. Sometimes the person is in the business of doing these type of transactions. He will buy today, he will sell it maybe after 1 week. He is doing a swing trading kind of thing. He might be selling after some time, holding it and then selling it. In that case, it can be business, it can be capital gain transaction also. So we need to see, really we need to see the nature, how he's doing, if he's working on it full time, part time, how much time and energy he is spending on this kind of business. Is he having a salary income as well? So those kind of things we will look at, and then we will determine, okay, let's keep it business income, or let's keep it the capital gains. Now the important point over here is we should check this why exactly. Okay, so just to show you some more example over here, is it on the SSC to know if this should be my capital gains, or I should consider it as PGPP? Yes, there is an old circular which says that the SSC can follow any approach. The same shall not be put to dispute by the assessing officer if stand once taken by the SSC in a particular year shall remain applicable in subsequent assessment years also, and the taxpayer shall not be allowed to adopt a different contrary stand in this case in the subsequent years. So what it says is that yes, if the person wants to, if the SSC wants to consider capital gain transactions also by way of stock and trade, it means his business income, yes, we will let him do that. However, please do not change this methodology year on year. So please be consistent. That is what income tax department says. Okay, fair enough. In our case, in my case, this person is a salaried person also, and he is doing these transactions, so I will consider this as capital gain. However, if you want, you can consider it as business income also, depending upon the SSC's rest of the source of incomes. Okay, I'll move on to the next one. Sometimes people consider to trade and consider this kind of capital receipts as business income because of various reasons, like they are into full-time business. Of course, they will have office, they will have staff, they can claim all those expenses, they can do an interhead adjustment, they can carry forward the loss. Some of things will be similar in capital gain also, but yeah, there can be various ways. Certain people would like to structure it, and from the tax standpoint also they will study, and then they will consider it. This part is okay. I will move on little bit because we are talking about considering it as business gain, business income. Then the carry forward procedures will also be applicable, and it could be speculative. In case of speculative, so I will not go in detail on this. This is pretty much clear to all of us that speculative 4 years carry forward. Non-speculative business is a normal business. We can set off against any of the sources except salary income, and then all other expenses can also be set off because it's a normal business. Okay, I will move on to the next bit, which talks about future. I hope up to here it is fine. We have covered intraday options, futures, short-term capital gains, and long-term capital gains. Now we will discuss future, how exactly the turnover will be calculated in case of futures. Now, in case of future, again, the formula says that we need to take absolute value of profit and losses. So in my sheet, I come to futures. Of course, in my sheet, futures is not there because this person is not dealing. I've taken this snip from another client. So this is how it will be calculated. Just the absolute value of these realized profit and losses. Okay. All right. Now the question arises, how exactly we need to file our returns. Shall we prepare books of accounts, or let's go it in an easy way and let's go ahead with presumptive taxation. Let's do it under 44AD. Practically what I have seen is not many people will go for 44AD, and the reason is that most of these traders, in my experience, they have losses, in fact huge losses, and because of that, if they do not maintain books of accounts, what will happen is they will not be able to carry forward their losses. So 44AD is not helping them because they want to carry forward their losses. Secondly, if they want to go ahead with 44AD, the actual profit is of course sometimes more than 6%. And if it's more than 6%, it is evident from the reports, because the reports are quite comprehensive in nature. They provide details about each and every transaction and everything. So if it is more than 6%, it's highly recommended that whatever is the actual profit, if it is 10%, 20%, whatever is that, we need to show it as per that. Okay. If the profit is less than 6%, then again accounts are required to be maintained. So all these are the reasons that I've seen. We do not go ahead with presumptive taxation. In fact, we will go ahead with preparing books of accounts and then looking at the balance sheet and profit and loss and going ahead with the filing. Now the question arises, who will maintain all these books? The client comes at the last moment with just the user ID and password, and then he says, please file it off. So the books of accounts, most of it is already prepared, by the stockbroker. He maintains everything. What else do we need? We need few more details about it. So what all documents we need in order to prepare, the balance sheet and profit and loss, and complete the procedure from our end is, first of all, the report. If the report is not as comprehensive as Zerodha, then we might end up spending some time in looking at the calculations and checking whatever is the turnover, how much is the STT and all. We might want to do that, but the report will play a huge role here. Next is bank statements to confirm the closing balances, loan statements if he's taken any loan. Now, if he is doing a business, if it is a F&O, we know is a business income, right? If F&O is a business income, of course, the business expenses can be claimed, and then he will be using some assets for the purpose of business. For example, the laptop or computers or printers or so on. So if he has that detail, we can take. Depreciation calculations, we can easily prepare that. Then proprietor's capital, the trader needs to provide this information. Then details of expenses, whatever expenses can be there. Now, yes, because it's a normal business, F&O is a normal business, and if you consider capital gains also as a normal business, then whatever expenses are pertaining to these transactions, all those expenses can be claimed as from your profit. For example, it can be some electricity charges, it can be some analyst fee which you are giving, it can be monthly subscriptions, etc., which you pay to various portals to get some more access to detailed information. So all those will be claimed as expenses. Great, right? Then of course, if something is more required, it might be 5-10% here and there. That can also be completed basis once we do a first draft of all the information. So the most important one is stockbroker report. If we have it, no problem at all, we can prepare all the financials. Okay, I will quickly move on to the next bit. This one talks about the calculation of capital gains. I will not go in detail on that. Just one point over here. In the report, if we see, for example, I have clearly calculated also, there will be a lot of costs which is involved. For example, there will be some brokerage, some SEBI charges, SGST, IGST, all these expenses will be there. Then there will be, let me come to equity, then there will be securities transaction tax, STT. So if we are considering if we are considering this as capital receipt, capital under the head capital gains, then please do not take this STT as an expense. Okay. If we are So if you are considering this as business income, yes, of course, every expense can be claimed, including STT. So this is one point we need to be very careful about. And if you see, it is the highest amount over here. STT is the highest amount over here. So government says, no, please do not take this as an expense when you are calculating, capital gains. Please do not consider securities transaction tax. This is an important point over here. Sometimes the report might not show what is the STT amount, and we really need to be sure that all the amounts taken are right or not. Sometimes we do some calculations on the report given by Zerodha people or any broker, and there is a simple formula. In case of equity, short-term equity, the STT will be calculated at 0.1%. 0.1% of buy and sell transactions. So 0.1% of buy value and 0.1% of sell value. That is how you will calculate, and you can, match the numbers. Of course, nowadays everyone will provide these numbers, so we need not spend a lot of time on calculations, but only the fundamentals and then filing the report. But sometimes if we need to, we must do a calculation and check if everything is okay. Right. Okay, I have kept a little bit about the long-term capital gain and short-term capital gain aspects before we actually go to the calculations part, how we prepare the balance sheet, profit and loss, and then do the filing. I thought it will be a good idea to give an overview regarding long-term capital gains. So, and there is an important tax planning which is also possible, which we will discuss towards the end as well. So long-term capital gains, of course, up to 1 lakh it is exempted, and then above 1 lakh the rate will be 10%. So we are talking about only those capital gains or those transactions which are happening through the stock exchange, not otherwise. Okay, and then on the unlisted shares, it will be 20% above 1 lakh. So 1 lakh deduction. We will talk about an important aspect about tax harvesting, how people can do this. So we will discuss this subsequently. Regarding the short-term capital gains, of course, it is 15%, and if it is unlisted shares, it will be as per the slab rate. So I thought I will just brief about this aspect as well before we go to the calculations in Excel file. Business income, we will show speculative business income as well. So speculative business income will be my intraday, whatever intraday is there in the equity section. In the equity section, I go to intraday, and this will be my speculative income. So whatever I gain over here, it will be my speculative income. 1,43,890 is my speculative income, right? So speculative business income, and then there will be non-speculative business income. Non-speculative will be whatever I get from FNO transactions. And if at all we are treating capital gains also as a part of business, then we can consider that also here. Again, the tax rate will be as per the slab rates. I will come to this part in a little while, and let's see what happens when a client provide this kind of report, how exactly we go about it, and we prepare our basic details. So I have some details taken. So I have already taken these details from the SSC, which is the stock broker report, the bank statement, loan statement, assets, etc., which I initially spoke about. Let me go to the calculation sheet and see how exactly we need to go about it. So in a sheet, I have written whatever turnover he has till now basis these files. So I see that on FNO, I have just linked these files. I will go inside on FNO. I see that the options turnover is this is how much. 35,56,000 is the options turnover. I go back, then I see on intraday there is a turnover of 3,39,000. This also we saw how we calculated it. Okay, so I go back. So turnover is somewhere around somewhere around 38 lakhs. That means, of course, it is much less than our threshold, so tax audit will not be applicable. Now, when I'm filing the return, the nature of business which I'll be choosing is investing activities 13010. Although, again, it is not very specific to the business, but yeah, this is the closest one. And if you want to use others also, that is also okay. And there are some other thoughts which says other financial intermediary services that also can be chosen. But as for my understanding, investment activities resembles, it to the closest. So you can do that. Now, I see whatever is my business income. Okay, now option sale. So in this sheet, I have linked everything. Option sale. What is my option sale? Option sale is this part. This is my option sale. Option purchase. This is my option purchases in the FNO sector, only the buy side. So now I'm no longer looking at the turnover. Turnover was calculated once just to see if it crosses my threshold for tax audit or not. Now I'm not looking at that calculation. Now I'm only looking at what is sale, what is purchase, and then how much is the realized profit. 3,38,000. Of course, it's a normal business, and in a normal business, all the expenses should also be allowed. So the total expenses, I have just taken total expenses from here. It's a business, even the securities transaction tax and all sort of expenses will be allowed. So everything is taken. I go back, and this is the normal business profit. 3,31,000 is the normal business profit. We have understood the business income. Now let's understood speculative income, because in our ITR 3 we will show it separately. We will not mix it up. We will show it separately. Intraday speculative profit. In my report, I have already taken this number. This is my speculative income intraday in the tab equity. In the tab equity intraday, and this is my realized profit 1,43,890. This is the profit. Okay, I go back, and then whatever is the expense. So I see that below this table there are expenses written over here. So these are the expenses, and these are linked. So all these expenses also, these expenses, SEBI charges, IGST, stamp duty, and all. These also have taken over here, and this is the net profit which I have obtained. Give me a second. Okay. All right. Again, this is a purely speculative activity, and we have ascertained the amount. Now, this gentleman, we see that he has huge amount of capital gains as well.
Sir, there is a question.
Yes, please. Yes.
Why STT can't be taken as expenses in case of capital gain and not the business income?
So in case of business income, see, we need to allow all these expenses. Okay, so all my it's just a part of it's like as good as a normal expense in that case. However, in case of capital gains, it's already a tax which we consider, STT, and while buying, while selling, there is already an STT portion, so we do not consider that. It is already considered as a form of taxation, so we do not again consider that in our calculations.
Okay.
So I'll go to the equity part, and I quickly see these are my short-term trades, and all these transactions sell, buy. We have just taken a total over here for all this sell and buy amounts, and these are again linked to, give me a second. These are again linked to this tab, wherein I mentioned full value of consideration, cost of acquisition, and whatever the expenses. So these expenses are all these expenses except STT. And then I arrive at an amount. So I've done all my basic calculations that these will be my amounts from the report itself. So from the report, I'm able to ascertain all these details. So let's put it in the form of profit and loss and trading and balance sheet form. Let's do that. So there can be two scenarios, like I told you initially. First one, if he is not considering the capital gain transactions as business, okay, he is doing it part-time or maybe, so we need to exclude capital gains from here, of course. But in case this is a business transaction, he's considering all these buying and selling as business, then we need to prepare with respect to the capital gain also, we need to show it as a business income only. So, sale of securities, 9 crores, purchase 8 crores, it needs to be shown as a part of trading account only. However, in this case, because he is not considering it as business, so let's see how we will calculate his, the gross profit and net profit and so on. So he's majorly doing the normal business, which is futures and options. From futures, he is earning, the sale is about 32 lakhs. Again, that is linked to the sale value. Futures, there is no sale. Okay. Then whatever is the purchase amount, again taken from the report. And all these expenses are again taken from the report. Okay. So all these are available, very much available in the report. So we can directly take that. And then we arrive at the gross profit. Okay. Now I have my gross profit available after considering all these items of expenses which are directly related to the stock market transactions. Then the gross profit I carried forward to my profit and loss. And then I take additional information from the client, like I mentioned initially, like whatever additional expense they incur, so everything which is related to the business, that will be allowed. So we will factor in those amounts as well. So these are some of the expenses which are incurred on with respect to this business. So that is why we take all these amounts as well, and then we come to a gross profit number, right? Again, with respect to the balance sheet, when we take information from the client about all investments and everything, so some of the information will be directly available in the report itself. For example, if I come back to the report, so give me a second, let me hide this floating panel. Okay. So when you keep on moving forward in the report, you see some of these tabs wherein open positions will be mentioned. Right now it is nil. Open positions for FNO currency, it's nil. Equity dividend is also nil, but I would definitely want to check it again with the client and AIS reporting. Sometimes it might not be visible here. I've seen that sometimes. Then I see that there is a ledger balance which says that there is an opening balance of this much amount and closing balance of this much amount lying with Zerodha. So this is a kind of current asset, something like cash equivalent with us. So that amount we need to consider in balance sheet. Apart from that, you might be wondering, there is one more tab over here which says other debits and credits. So this is a kind of consolidated report wherein all these debits and are mentioned in this report as well. And if I can quickly show you, every time there will be other credit and debit in the respective folder, respective tab also. So these are linked to that. So you can just ignore this because we have already considered it here. Whenever you see this, you can always ignore this. Other debits and credits can be ignored. Now we have seen that there's a closing balance with Zerodha. Apart from that, there is no amount. So accordingly, it is written 00. Then there is some more amounts which the client has given some information that is considered. Whatever business expenses, we just take that, the assets which is he's using for the purpose of business, and of course the depreciation on it is charged. Then the proprietor's capital, we take that information from the client, reserves, and any other, it can, sometimes they take loan, secured, unsecured, all those things can be there, right? Now, when we have this basic structure available with us, then we go ahead on the filing part. So,
sir, there is a question.
Yes, please.
Can you please confirm why only profit loss in absolute terms is considered while calculating turnover of future, whereas in case of option, it is sales plus premium?
That is right. So there was one question already on this aspect. So the guideline which is issued by the ICI as well, this is how it is defined. So I do not have a precise.
Is it only for calculating turnover, and while making profit and loss, we have to mention full sale value and purchase value?
Yes, of course. So when we are calculating turnover, they have prescribed specific method, they have prescribed specific way how it should be done. Okay, so
it is only for knowing that whether audit is applicable or not.
that is correct, that is correct. So this is only for that particular purpose. There is a guideline from the ICI and they've mentioned this is how the turnover should be looked at. But if you look at this transaction from a normal perspective also, then we see that, okay, this is the sale value and this is the buy value. It's nothing to do with this turnover particularly, right? And when I clearly see these figures available with me, that is how my bookkeeping is done by Zerodha, I will accordingly consider those amounts only. So I will not at all consider sale of options may here turnover. I will not consider, whatever is in my report. I will not consider this amount as my turnover. No, not at all. Then how will I make my books of accounts and how will I adjust my profits? Everything, there will not be any, structure to that. Right. So when I clearly have what is my buy value, what is my sell value, so this is what I will be considering while preparing my profit and loss. Okay. So reiterating the fact that the turnover we have calculated, all these formulas for different sources of different sectors of share market transactions is only for tax audit purpose. The remaining ones, the real nature, we need to look at the report each time and then we need to see what is the amount we need to consider. Okay. So in order to save some time, I quickly prepared and filled some aspects of this, and we can quickly look at some of the areas wherein we will be looking at. So now that we have all the information, then we can simply pick numbers from here and update the ITR 3 utility. So source of fund proprietors, loan fund, this can be updated easily over here. And in the applications, whatever numbers we have already calculated, all these will be easily updated over here. I think there should not be any question in this aspect. Now there is an important
there
point.
There can be option that clients having future also, options also, intraday also. So
yes,
we will consolidate it all in single P&L and balance sheet.
So in case of intraday, we need to look at it separately, because it will be, we cannot carry forward it for 8 years. It will be only for 4 years. So speculative part is looked differently. Apart from that, if my client is having any other business, for example, some handloom business, of course, that will also be added over here. If he consider this capital gain also, that also I will consolidate and add to this this trading and profit and loss account only. So what, because it's a normal
because
nature
there
of
is
business.
only one option to fill balance sheet or P&L.
Yes, here there is only option to fill one balance sheet and we need to consolidate and accordingly fill it.
Okay.
Yeah. So like if we have futures, so say for example, sale from handloom business. Yes, whatever is the business portion, we will take that much sales and accordingly corresponding expenses we will take here. So sometimes in order to provide some value addition to the client, what I generally do is I look at this on a standalone basis and see, and then I will because these information I will have already, and whatever other business the client might have, he will give the information, it is generally delayed. So whatever information I have, I prepare that, and whenever I get detail about other business, accordingly it will be prepared on later part, and then I can merge it, consolidate it, and prepare it, the final one. And that is how it will be submitted. It will be updated on the utility as well, right? Okay, now the question arises on the no account case. If we look at no account case, of course, we touched upon presumptive taxation, why it is not beneficial. In a similar way, no account case, because the client is already, the broker is already preparing this much data in detail. If, it is up to the trader to maintain all this data, I can say that, yeah, he might not be able to prepare it. But when everything is readily available, it makes more sense to prepare it properly under the right heads rather than just using no account case. Okay, so I will go back to the schedules. and let's see how the P&L, how the trading account and profit and loss and the respective other accounts are treated. So in the trading account, revenue from operations, let's look at revenue from operations. So because I already have the balance sheet done, I know in my trading account it will be sale of options 32 lakhs that I can simply put over here. Now again here, if you see, let me edit it. Yeah, so the options to show over here, see the ITR, the returns and the system which the department is using, it's not changed for a while. This has been same for quite a number of years now. However, the business nature, the transactions, the economy, it is changing much faster than that, and then we have to apply our thought process and judgment, and then modulate that data and put into the utility. So we will accordingly now see that there is no other option like sale of options or futures or any such thing. So sale of goods, we will use it here, and of course the definition of goods as per sale of goods act will include shares as well. So yes, we can update it here like this. Moving on, so that is how this is the only revenue from the operations. So we can just go back to the schedule. Revenue from operations. Okay, there is no closing stock. There is now. Let's see how we look at the debits part. Now the purchases, we know the number which is linked from the report. So it is easy for us, just a copy paste. 28 lakhs amount is updated over here. Then the direct expenses. So all these are the direct expenses which we have seen that which are incurred for the purpose of this business, very much dedicated expenses only for the purpose of this business, I've kept in the trading account, right? So generally it will not very clearly again give all these heads of expenses, brokerage, securities transaction tax, stamp duty, etc. Just put it, add sections, and if you want to segregate it more and give bit by bit, it will be better. You can give that as well. As of now, I have just kept it under one head, stock exchange transactions and other charges. So I have consolidated everything and updated here 6946, right? Okay.
There are 1-2 questions.
Yes, please.
Profit or loss from shares bought from margin from broker is taxed under business head or capital gain?
I'm sorry, once again, please. Loss from?
Profit or loss from shares bought from margin from broker.
Okay.
Is taxed under business head or capital gain? We
need to understand if we are doing a delivery based trading. Okay. Normally what we do is when I use Sher Khan, so I will pay only margin amount and then it get delivered to my account on the next day. Then it means it should be treated under capital gain, not as a business. Okay. So sometimes there are a lot of terms which are being used. Of course, for example, you are doing trading through Grow. It will ask for the complete amount and not on the margin basis. Then if we need to look at the substance, the basic substance, if it is we are getting the delivery, in that case it needs to be under capital gain. If it's not a delivery based system, then accordingly we need to treat it.
Sir, next question is, if client has 2-3 transactions in intraday, can he show it in short-term capital gain?
No, intraday should not be capital gains. Of course, intraday is specifically identified as speculative business activity, so it should not be shown under capital gain. But sometimes what happens is, let me tell you practically what happens is, if it is just immaterial transaction, sometimes some person is just trying it how it looks like, okay, and he just purchases 100 rupees share and just sell it on the same day. Okay, so in that case he need not prepare ITR 3. It is very difficult for him. Then he can, sometimes it is okay, he can show it under capital gain also and close it if the amounts are really immaterial. So we need to look at those factors as well. But strictly going by the nature, it should be filed, it should be treated as a speculative business income only.
Please clarify in intraday balance sheet required or not. or if we can claim it as no books case. As in software, it gives warning of not opting no count case in intraday.
Okay, so in case, so yeah, so in case if we have intraday, you are saying that in case of intraday, we do not want to prepare books of accounts and we want to close it as a no account case. That is what you're saying,
Yes.
right? Okay, so intraday is particularly a speculative kind of transaction. There is a particular way in which it should be shown in the ITR. I will come to that portion and show it how exactly what is the right way to show it, and it should be shown in that way only. So it, because why will we want to again show it as a no account case when we have all the details, you know, available? So I will come to that when I'm, you know, looking at the P&L part, the subsequent parts. I will come to that for sure, and I'll show you how exactly intraday will be shown.
Okay, sir. Please proceed.
Okay, thanks. Yeah, so feel free to let me know if there are any questions or clarifications required. I'll be more than happy. Coming back to the main schedule. Okay. So we were at the trading account and we see how, you know, with the help of these initial calculations, we have updated all our schedules one by one. Okay, so we are done till here. And now let's see how we update our profit and loss. Now, sometimes there could be one more approach, which, so there is another school of thought, because this area is not very clear. So most of the people, they have another thoughts as well. So what that can be possible is, let's look at the profit and loss and see. So when I come to profit and loss part A, now credits to profit and loss, again, the information is right available. Profit from FNO, which is directly linked to, whatever is the normal profit. And give me a second, hide. Okay. Okay, so we have already seen that give me a second. I think it is showing credit. Okay, got it. So yeah, this is my profit and loss, wherein it shows me credit from my trading account, which is of course from, it will be transferred from my trading account to my profit and loss. That is perfectly fine. I will quickly do a edit over here and see what else I can put here. So when I was looking at the bank statement, I see that there is some credits on the bank interest portion also, small amount, which we will, simply update in other income segment, interest income, and then we will finalize this. If there are any other income, of course, we can put that, or else we can just go back, because credits will not be there much. It is already, affected. We have given that impact in the trading account. So let's look at the debits. Okay, I think some of these are not added yet. So maybe in hurry, just to show you off, I prepared, to some extent I updated it, but however, we can have a look at it and wherever we need to show. So all the dedicated expenses we've already shown above, and all these expenses are also with respect to the same business which this person is incurring, depreciation, subscription fee, and everything. So these also one by one will be shown here. Sometimes a dedicated line item will not be there. For example, for telephone it might be there, for subscription fee it might not be there, and some other fees it might not be there. Simply whatever is available. Can I claim some salary expenses also? Yes, if I have some staff who is doing some research for me, I can certainly, if I'm paying some salary, really, that can be claimed over here, of course. And some of these might not be there. You continue to the next bit, and then you can put it in the others section. Okay. So you can put, sometimes if some head is not available, just put it over here, and then we can just confirm and close this amount, this account. Let me Why it is going forward? I'm trying to come back and it is moving forward. Give me a moment. Okay, till the time it is loading. Back to schedules. Why it is okay. All right. So second. Okay. Now we were looking at when we were looking at data, we saw that there is a speculative income also, and it is very important that we show it at the right place in the ITR 3 also. So what we will do is we will come to the profit and loss, of course, and then in the no account case we will show it over here. I will edit it. Speculative. Okay, turnover from speculative activities, we have already calculated everything that from this section we will just copy paste. Intraday profits we will update. Expenditure 9497, that expenditure also we will take, and then the profit from intraday. Can I take any other expenses apart from these dedicated expenses which are taken from this schedule? Yes, it is a business. It is a business, and whatever are the genuine business expenses we incur, that can certainly be there. So of course, if at all there is any other expenses like some analyst we are paying some fees, or some subscription, or some other kind of fees, that can also be there, and then accordingly this profit needs to be calculated, right?
Sir, penalty charge by exchange for margin shortfall can be claimed as deduction.
That can be claimed if it is a business. Yeah, that can be claimed as a deduction, because I am into that business only. So it is not any penalty which is given by law. It is in the normal course of business, wherein they are treating some interest portion on the amount which is involved as a penalty. That is my business expense, that can be claimed.
Okay, sir.
All right. So when I update my, what is not aligned, because I think some utility is also open. Okay, anyways. So profit from intraday we take, and give me a second, let me close this file. Okay. All right. So whatever, if there are more expenses to it, there is no separate head to show. We can have the calculations in our file wherein we are doing all these accounts preparation, and then we can show it over here. Now I see 1,34,393 is shown as my speculative income. This is my speculative income. I come save it and I come back to schedules.
It means in profit and loss, you will fill all the consolidated details, and
That
in
is right.
computation, you have to show it as a separate.
That is right. That is right. So speculative, nothing I took in my trading and profit and loss account for sure. Okay, so for speculative, I did this calculation, in one corner, and then I updated my ITR 3. Apart from that, whatever is my business, I have, if there are 2 or 3 more businesses, all consolidated one we need to take here. Okay, moving on. Now we will go to the next schedules and quickly complete if there are any other areas which we need to see. So if there is nothing, we can just confirm them and come outside. Okay, now let's come to whatever is more applicable. I will show it over here. Now in this case, this person, we have seen that business and all we have already accounted. Now there are short-term capital gains which we prepared this table. Okay, and again we have already seen that yes, substantial part he is earning through the capital gains only, which we have seen. Now let's see how these are to be updated in ITR 3. So Give me a second. I come to my capital gain section, and all my shares related, these are all the transactions which are happening through a recognized stock exchange, and the STT is paid. So I will choose this third bit over here, and then I will come to the schedule wherein I need to update the details. So let it get load. Okay, opening up. All right. So we have already prepared this schedule quickly. We will update the values, just the values, full value of consideration. We will just edit it and update the full value of consideration. 9 crore 32 lakhs 96,000. Then the cost of acquisition without indexation. Of course, indexation will not be applicable. Then the expenses wholly and exclusive in connection with the transfer, 4298. We already prepared this data over here, which we have linked with. Give me a second. View formula bar. Okay, which we have already linked with the respective tabs. So once we do that homework, then it is only updating values in this particular schedule. Okay, so now I have updated the values, and I come back. Okay, taking some time. Okay. And I will be, now this is reflecting over here, income chargeable under the head capital gains, 44 lakhs 72,000. So 15% will be taxable on this particular amount, that we will show in the computation also. 4472 453. Okay. 423. Yeah. Back to schedule. Okay, sometimes there can be long-term gains also. So like in our case, long-term gains are not there, but yes, sometimes there can be some long-term gains also. For that, we just need to update this 112A schedule, which is explicitly given for this purpose, and we can add details over here. Now, whenever we are updating these details, we need to be sure that when these units were acquired, if these were acquired like before 31st January 2018, then there is an additional information which needs to be updated. We need not worry about it. Everything will be given in the broker's report. It is only a copy paste from this report, so that should be okay. And if it is acquired after 31st January 2018, then again some of the rows will be disabled. Whatever is required, that information we can update from this report, and we can update the schedule. So a normal schedule can be prepared in the calculation file for the short-term long-term capital gains also. So we have all the information, so that should not be a problem. I will come back to schedule. Okay, now there are chances, like there are huge chances that this person who is trading and who is doing capital gain transaction, he's doing all share market related transactions, there must be some dividend. We must take this information from the report, plus we need to cross verify it in the AIS section as well. So in AIS, and after checking in the report, if there is a dividend, that needs to be reported in the other schedule section. It's opening up. Give me a second. So this we must look at. There should be okay. Right. So we will update it in other schedules, dividend gross, and that will be updated. As of now, we know that this person did not have any dividend income. we have checked that in the report also, and in AIS also I checked that there is no dividend income. So still, just to show it in the ITR, I have just updated a number over here, which I will remove it later, so it will be shown over here, under other sources, dividend gross. Okay. Now, if there will not be many things applicable as of now, I'm not keeping the salary income and all, because that will become very lengthy. So only share market. Yeah.
Please also explain whether it is compulsory to show each transaction step-wise detail in long term or short term.
Okay, no, what we need to do is, like, what we have prepared this schedule, and we are sure that these details are taken right from the reporting. Then we need not again put everything step by step. We can just take the consolidated number and show it over there. In case of short term you're asking, or in case of long term?
So please tell for both cases.
Okay, in case of short term, we had this option to update it directly. We will update it. Now let's look at the long term one. It needs to be updated one by one. I will show you. Give me a second. So when we have this detail as on or before 31st January 2018, I remember that there was a huge schedule, and then I had to update all these details one by one, because the ISIN number will be different in each of the cases. Okay, so we need to update it one by one for all those transactions which are before 31st. And let me check for 31st January 2018 as well. So here we can prepare a table, because it is not asking us step by step. So we can just prepare a table and update the numbers over here. So we can simply have a simple table like this, prepare it with the help of the report, and then we can update it over here.
Okay, sir.
Is it? Yeah.
Sir, there is another query. What
Yes.
will be treatment for crypto trading or short-term, long-term gains from crypto?
Okay, I was expecting this question on crypto and NFTs and blockchain related stuff, digital assets. As of now, I have not covered in the schedule, because this was specifically for the stock market trading. However, we know that it will be 30% flat taxation without any intra head adjustment or inter head adjustments. So as of now, because I have not focused on that part, I will not be able to speak on that front as of now. And practically also, I have not seen any client who has given me crypto related details. So it won't be appropriate as of now to speak anything on that part. But looking at the law, it says 30% taxation flat without any adjustment for expenses, and then intra-head and inter-head adjustments will also not be applicable. So from the theory perspective, that is the answer. But from practical, I have not as of now received any client on which I have worked for crypto related or NFT or digital related assets. Excuse me for that particular part. Okay, so moving forward from the other sources part, wherein we will show the dividend, which will be there for sure. Then the remaining sections, which will be with respect to the brought forward losses, carry forward losses, and so on. Accordingly, one by one, we can update, and we can accordingly close this ITR. So major focus was to show how exactly we look at the reports, we calculate the turnover, and then we accordingly update these numbers. I think from that perspective, it is okay. The remaining ITR portions will be similar to like any other nature of business or for any other SSE, so that part should be okay. All right, let me go back to my slide deck and let me see the next topic to be covered. Okay, there is one important, see, ITR filing and all is a kind of post-mortem which we are doing, and everything has happened already. So we are not able to provide a lot of value additions to the client. However, if it's a regular client, we can certainly provide some tips. Most of you might already be knowing about it, but let me just quickly take 2 minutes and focus on this one. So the first one is that we all know that there will be certain shares on which there will be losses. Okay, and of course there will be some gains as well. So this particular loss harvesting technique is done in the month of March, wherein we sell all those losses, shares wherein we have the losses, and we book those losses. So I repeat, so whenever we have some profits and then we have some losses as well, we book losses by selling off those shares, and we will get to those actual losses. This actual loss we will be able to adjust it against the profit, and through that we will be able to minimize our tax liability. Right now, what is the cost involved? Cost involved in this particular type of transaction will only be the brokerage cost, which will be there, because and these days the brokerage is really low. So only the broker, with the help of that small amount, we can utilize this tax losses, and we can save on some taxes part. Yes, we cannot completely avoid the taxes, of course, but it can be delayed to the subsequent periods. So that part can be suggested to the prospective traders or investors in that case. And normally, one more thing that many a times, generally I also do this kind of thing, wherein we know that up to 1 lakh the long-term capital gains will be exempted, up to 1 lakh, and after that it is taxed. If I'm not utilizing this limit every year, it is like some loss to me. Okay, so what I try to do is I will sell off some long-term shares and will ensure that I'm able to have capital gains up to the extent of 1 lakh, or if it is 90,000 or 80,000 also, that is also fine. So I try to do that and utilize this limit every year. When I'm utilizing it every year, only if I really love those share and I know that I do not want to sell them, it's for long-term perspective, it's okay, I can buy them again. But as of now, I booked that profit. So in the above technique, we booked the losses, and we used that losses to reduce our liability. And in this particular technique, we booked our gains, we sold off our long-term assets, we booked our gains, and then we are able to utilize this exemption of up to 1 lakh rupees. Okay, so this can be suggested to the clients who are really into this kind of business. Okay, sometimes one question arises that trading is quite uncertain, this kind of business is quite uncertain, then how about the advanced tax calculations? So the simple answer to this is that whatever we have, we will not be able to predict. Like there can be a lot of profits in the first half, and maybe by end of the year there are a lot of losses. It is very uncertain. So what we can do is we should, whatever is the actual profit we have earned, just pay taxes, advanced taxes on that. By that, we should be able to minimize whatever is the interest liability. So whatever we see that it is realized, it is profit, to that extent we should pay. So that should be a right approach. That should be a proper approach to this. Okay, now there is one more point which I wanted to speak to. So we have seen in this report, we have seen these are all equity related short-term assets, or these are mutual funds. Okay, if I show you, the report says mutual funds also somewhere. But what will happen if it is a debt mutual fund? Okay, so let's first understand what is a debt mutual fund. So if any mutual fund who has, who invests in 65% or more in equity, that is an equity oriented fund, and whatever is left, that should be a debt mutual fund. So in case of debt mutual funds, we know that these long-term gains will be taxed at 20% after indexation, and the short terms will be as per your slab rate. Okay, so we need to be a bit particular about this part, because this will be treated separately. But most of the times there will not be a lot of people who are investing in debt mutual funds, because the entire concept of investing in mutual funds is to gain more leverage or more benefit than those instruments which are giving us some fixed amount of returns. So but still we should be aware of the fact. Okay,
Sir, in AIS, we see that there is mention of equity and the mutual fund,
right,
but
right.
sometimes there are also mentioned other fund.
Okay,
So how to check that which you should.
so basically what happens is the brokers will report that data, and there can be n number of funds, there can be n number of investments where this is done. So whatever is not categorized, of course that will be kept under the others category. What we need to see is that if at all it is reflected in our report, if it is reflected in our report. So I was looking at this particular data from this particular client. Give me a second. Let me show you with the help of pulling the data. One moment. So I think this might get deactivated, I mean logged off. Okay, it's still working. Great. Working, not working, working. Okay, so it will show the broad category as sale of securities and unit of mutual funds. What you are saying here is that there will be some other funds also, right?
Yes,
That
other units of.
right. So see, it's simple. We need to see if the same details are there in our report also. There sometimes there will be the vendors, or there will be some multiple vendors also. For example, I myself trade with two brokers, so I will have multiple reports. So sometimes what happens is the client reports one and does not report another one. Okay, if we are sure that yes, that is part of our report, then we will consider that. What most of the people are saying is that the data which is reported over here is not correct. Okay, if we see that it is not there in Zerodha, or it is not there in Upstocks as well, then just go ahead and we need to provide the feedback by editing that part. But again, that is a little tedious exercise, because for example, in this case, when someone has sold more than 8-9 crores of assets, then one by one looking at the data is little difficult. For example, I realize that this particular bit is not right. For example, first one, GTL infrastructure is not right. I'm not able to find it in my report. I will trust the report which is given by the broker. Okay, and because this is reported from by the broker, and there is no direct involvement, because I am informed at the last moment, I do not know if it is right or wrong. If it is not right, there is a option to give the feedback, and simply we can give that feedback and edit those numbers. So for example, I'm sure that this is not right. I will choose the feedback that information is not fully correct, and then I will accordingly update the details over here, whatever is right, and then I will submit the details. That is what I can do if I do not find those other assets in in my report, but it is lying over here. Okay, is there any other question for me?
Okay, sir. Please
All
proceed.
right, thank you. So moving on to the next topic of the day, which is ITR U. So we know that this is initially this was such a great news, but when we looked at the calculations and the taxes part, practically what I've seen is a lot of clients say, sir, we will live without filing ITRU. It's okay, that is the amount of taxes it is giving us. So before we proceed to the tax calculation part and see how exactly the calculations are working, just to give you a brief about it, because without giving a little bit overview of it, it will be really difficult. So we all know that section 139(8)(a) has been inserted, and we can file returns up to 24 months. So, okay, so this is the amendment, and this is starting year, assessment year 2021. Now when I say 24 months, it means, of course, it gives me 2 assessment years to file my return. First, some of the common questions, that who can file, who cannot file. So let's briefly, in a minute, we will discuss this part. Who may file? Answer is any SSC. Anyone can file this, as simple as that. How many times it can be filed? Once only for the assessment year, and not again. Once it is filed, again I cannot file. Up to when it can be filed? So the answer is 24 months. Now for 2021, it starts with 2021, so it can be filed up to end of 2 assessments year, which will be up to 31st March 23. So 2 years again for assessment year 21-23, one more additional year, so it will be up to 31st March 2024, right? Okay, time of payment of taxes. Whenever we are filing, we first pay the taxes and we proceed further. That is how it works. How much cost will be involved? Yes, this is very, very important. I'm not saying just taxes, because it is normal taxes, plus it is interest, plus it is late fees, plus it is some additional taxes as well. So it ultimately becomes cost. So we will see how much cost is involved, and when it can be filed, we will see that as well. In some scenario, it cannot be filed also. So very briefly on my slide, I have, in the following scenarios, ITR U can be filed. So there are multiple genuine reasons, which the SSC can take a benefit of filing the returns. So right now, looking at the provisions, we observe that these are more in the interest of the revenue, wherein the government, wants to collect or safeguard their, revenue part. And from the SSC standpoint, if he sees or if he sees that yes, something is incorrectly reported, and we know that there will be some litigation provisions, and then it will be much more difficult to come out of the situation, yes, they can take the benefit and they can safeguard themselves from the litigation provisions. So this is the whole intent of introducing this ITRU. So we all know that we cannot file return of loss, any refund and all we cannot claim. So those are the areas which we know that in those cases we cannot file ITRU. I hope all of us are aware of that fact. So I will move forward towards the calculation bit. Okay, what is the cost involved in filing ITRU? Frankly speaking, when I provided the costing sheet to the prospective client, then he thought of changing his decision, and then he said, I will get back to you. I said, okay, no problem. So what is the cost involved? So first of all, yes, interest will be there under section 234A BC. That interest part will be there. Then the late fees, yes, it will be there only if the return is not filed earlier. If you have already filed, then this part will not be there. Now there is some the way the late fees is calculated by the utility is not in line with what the provision says. I will come to that. So for example, in the assessment year 21-22, if we file the return, if we file the ITR, and if my income base is from 2.5 lakhs to 5 lakh only, the system is giving me 10,000 rupees penalty. Okay, it is not stopping at 1,000. It is giving 10,000 penalty. Again, for assessment year 21-22, it is giving a 5,000 rupees penalty. This is, if you interpret the provision, I think there could be a mistake, or the interpretation needs to be checked once. Ideally, it should be 1,000 as per my understanding, income from 2.5 to 5 lakhs. But let's see if some clarification comes in this regard, because we still have 8-9 months as of now to file the updated ITR for 2021. So let's see what comes up. But as of now, the penalty, the late fees, which is showing in the utility, is 10,000 rupees, even when the income is less than 5,000. If the income is 2.5 lakhs, then there is no late fees coming. Now, the important, very important part over here is the additional tax amount. How much will be the additional tax which we needs to pay? So if we are filing the return within 12 months from the end of the relevant assessment year, so the additional fees is additional tax is limited to 25% of tax plus interest. Okay. And so I will go to an Excel sheet also and see how it works. But just to mention, update it, theoretically as well. So the additional tax is 25% of tax plus interest, and if the return is filed between 12 to 24 months, then it is 50%. Okay, so the amount of additional tax is really huge over here. Now let me quickly go to the Excel sheet and look at the provisions and how much additional taxes are being calculated by the system. So we know that up to assessment year 2021 it can be filed up to 24 months, then it will be filed up to 31st March 23. Again, for assessment year 21-22, again 24 months, it will file up to 31st March 24. This we already covered. Now taxes, this we already covered. Now let's look at the example. So if when we have a taxable income of around 5,50,000, to be precise, 5,50,000, the total taxes, so there will be a normal tax component. Okay, so the normal taxes which you will end up paying, that is coming to how much we calculated it, and it is coming to 45,000. So tax from 2.5 to 5, then the remaining taxes, then the cess, then interests, and then the fees. Fees right now, like I said, is coming to 10,000. In this case, it is valid because it is 5,50,000. If it is 4 lakh something, or if it is between 2.5 lakh to 5 lakh, then the fee ideally should be 1,000, but somehow the utility is taking 10,000 only. So that on that, let's wait for some update and see how, if it is mistake or that is how it should be interpreted. Right now, the normal taxes plus interest. In this case, the normal taxes plus interest is how much? The normal tax is this portion and the interest is this portion. We will not include the penalty. Okay, we will not include the penalty when we are calculating the additional taxes. Okay, so we will exclude the penalty amount, the late fees amount, and then we will take the normal fee, normal tax plus interest, and then the 50% of it, or 25% of it if it is within 12 months. Okay, so 50 or 25% of it, and then we will come to the final tax payment. What we have been observing on the utility is, give me a second, let me open one utility quickly and see. Okay.
Sir, is advanced tax is deducted from calculating additional tax?
See, if we have already paid and considered those advanced taxes in my earlier return, then you are saying that there is some advanced tax which is already paid, because if
yes,
I
already
have
paid advanced tax and TDS.
Okay, yes, that so last time it was not considered when we filed our original return initially. That time it was not considered.
It was considered.
So if it was already considered, then again it will not be considered, or else is the question something else? Sorry, I did not maybe understood.
Nitin sir, please, you can explain your query. Advanced tax paid and TDS paid. But return not filed. So the query is advanced tax is there, TDS is also there, but return was not filed.
In that case, yes, we should be able to take the credit of that. If it is paid, we should be able to take the credit of that.
Okay.
So we were looking at the calculations, how much taxes, and how ultimately, if we are showing the if you're filing the return as of now. So once we download the utility, all the basics part is that, in the party section, we need to fill on all the required details, like where filing, have we already filed or not filed, all those things we can file. And then we basically check if, for example, if I take 3 lakhs of income over here, give me a second, 450. So this was the point I was trying to explain. If I take 4 lakhs of income and then there are no major deductions for this particular SSC, and I quickly do a calculate taxes. This part, it is still taking 10,000 as the late fees. So this should be, maybe some update might come. This is what we were discussing. And if I quickly take, how much did I take in my calculations? Give me a second. 50. Sometimes it behaves a little differently. Give me a second. Okay. Total income at 5.5 lakhs. Okay, at a total income of 5.5 lakhs. Again, the fees is remaining constant at 10,000. But if it is less than 2.5 lakhs, then we will see that this fees will not be there. So if someone is filing, it means if someone is filing a return, wherein he has not, if the income is less than 2.5 lakhs, then in that case, this fees will not be applicable and none of these things will be applicable. So only in those cases, without any fees or penalty, the return can be filed. Otherwise, we see that the kind of additional taxes which is appearing, which is coming in the calculations, is really huge. Okay, so we need to do a cost benefit analysis also, like I said, when I prepared the computation and gave to one of the clients, and then he said, okay, I will get back to you, and till now he did not get back to me. So that is a kind of additional taxes which are involved. However, yeah, if something is really wrong which is filed, or some less taxes are there, then basis that cost benefit analysis, accordingly we are proceeding with it. Okay. Okay, so just I have summarized two scenarios over here, wherein again, first of all, if the taxable income is less than 2,50,000, then there is no additional tax or no benefit. And the second scenario, wherein 2.5 to 5 lakhs is the income, then only the late fees will be applicable as of now, which is 10,000 and 5,000 for assessment year 21-22. And ideally it should be 1,000, but it's okay. The system as of now is considering 10,000 and 5,000. So these two scenarios I have mentioned, and the third scenario wherein the income exceeds 5 lakh rupees, then we have to pay the normal taxes plus the additional taxes plus the interest plus the late fees. And the calculation for the additional taxes, like what we have seen, calculation for the additional taxes is that whatever is the normal tax and whatever is the additional, whatever is the interest, on that we need to calculate 50% or 25%. So that will be our additional tax in this scenario. Okay. Okay, I think that is it from my side. If you have any questions, we can discuss that as well.
Members are requested that they can ask their queries. They can unmute themselves and ask on live, or they can also write on chat box. Can we file nil return under ITR U?
Yes, that can be filed. That can be very well filed. Like I mentioned in this particular scenario, nil return in the sense the income is less than 2,50,000, that can be filed. So ITR U as of now, because it is recently, all these utilities are available, and there are many queries which the clients are asking as of now. But because right now the normal filings are going on, and we still have time, like some 7-8 months are still there. If I see, look at the current date, so it will be coming in the more upcoming months. More queries will be coming for sure in this particular area, and some more clarifications will also be given. So let's see what all.
Under nil return, can we claim refund?
No, refund as such, it is clearly given in the guidelines. We cannot claim refund.
So what is last date to file ITR U?
Okay, so whenever we are filing ITR U, there is a simple table which is over here. For the assessment year 2021, we can file ITR up to 31st March 2023. Okay, and for so basically 24 months time is given. So 2 years time is given. So for the assessment year 21-22, it is up to 31st March 2024. So these are the time. More early we file, if the client is okay, it is better, because we will be able to save on some interest part. But yes, for AY 2021, the last date will be 31st March 23.
What was query from Minkal Gupta? What was the late fees for income above 5 lakh?
Okay, so the late fees will be 10,000 rupees. So if we are talking about assessment year 2021, the late fees will be 10,000 rupees. And if we are talking about assessment year 2021, it will be 5,000 rupees. Yeah, so yes, we have mentioned it over here, above 5 lakh rupees, 10,000 and 5,000 for respective assessment year.
Request from CA Gaurav Chavda, please share the PPT. Yes, I will take the PPT from Sandeep sir and share it. Whether ITR U uploading started or not.
Yes, it is getting uploaded. Sometimes what happens is and if any section is not updated correctly, then it will keep on giving you some or the other errors. But if you are able to upload everything, then please ensure calculate. Then XML is also getting generated, JSON is also working fine, and then we are able to upload it as well. So
can we file ITR U for assessment year 1920?
No, that is not possible. So as per the notification, it is given for 2021, assessment year 2021, not for 1920. So that will not be possible.
Okay, over to CA Rishabh Agarwal, executive member of Jindal branch. One more query is there.
Yeah.
If company goes into liquidation, how and when loss on shares can be booked?
Okay, so you are saying that the company is investing in shares. This is an investment company.
Query is, if company goes into liquidation, how and when loss on shares can be booked? I think ITR filing will continue. If I have invested in company.
Okay, Okay, if you have invested in company and that company goes into liquidation, then it's a complete loss for you. Then you can
Yes,
do it in the same year in which the company is closed and it is liquidated. If you have losses, you can claim it in the same year, in the year in which you are filing the return, in the relevant assessment year only.
Thank you, Sandeep ji.
Yeah, thanks.
Yeah, yeah. I think it was a very wonderful session by Sandeep ji, uh, as it was the time of the need to understand that what all the changes are there in while filing returns in case of sale of equity, mutual funds, future and option. As in day-to-day life, we are facing this problem.
Mm-hmm.
Nowadays, I think every second person is investing in shares. So every professional was facing this huge. This was a huge problem for everyone, and even it's same for ITRU. Like we are from Jalandhar, and and here maximum customers are uh, filing returns for going abroad, and they
Right.
need to file their returns for sometime for last 2 years, 3 years,
Mm.
and they don't have and they have not filed their returns earlier. Only while going abroad, they remember that they need to file their returns. So I think it was also a great session by Sandeep ji. Thank you so much, Sandeep ji.
Thank you for
And
giving me this opportunity, everyone. Thank you,
yeah,
Shashi ji.
Thank you, CA Sandeep sir. I want to inform members that we want to have a webinar on this topic. So I searched on, we were not able to find some young speaker who can guide. So I searched on YouTube, and Sandeep Kumar, CA Sandeep ji is on YouTube, and he has released very good, useful videos on ITRU, on shares, and many other topics. So I contacted Sandeep sir, and I also congratulate Sandeep sir because it is his first CP webinar,
Yeah.
and I wish him good luck that he is such a great caliber, and he shared wonderful knowledge and every aspect of these in such a short time. I think it could have been a workshop, a detailed workshop on all the things, but in a small, short time, he has explained all these things. And also, I am thankful to Sandeep sir because in these busy days, he has taken so much efforts to prepare the PPT, to prepare the data, to show us so that he can easily guide us about this topic. And this is best part of our profession, that we help each other and we grow together. So we are very thankful to speakers like CA Sandeep Kumar, and we also wish that in future we will have more of such session. Thank you so much, Sandeep sir, and also thanks to members that in this busy schedule they have come to learn about these topics, and this was really wonderful. And even many of my doubts were cleared regarding the ITR filing. So thank you so much, Sandeep sir.
Thank you so much for giving this opportunity. And yes, it was my first, webinar in front of members. So in case of any mistakes or any, which because I'm not that much used to such live webinars. So in case of any such thing, please excuse me. And yes, I'm available. In case you have any further queries, you can just contact me on my phone number. I should be able to help you out in case needed.
Yes, Sandeep sir is on YouTube, and he's really actively participating and helping all the queries. So you can watch his videos and ask your queries on the comment box, and he will be replying those. So thank you so much, Sandeep
Yeah,
ji, and
thank you.
thank you all the members.
Thank you.
thank you, everyone.
Thank you, everyone. And if you have any other topic at present, we are busy in ITR, but after that, if you have any other topic which you want us to organize webinar on or seminar, so you can inform us. Thank you so much. Thank you